Hello everyone, welcome to today's video. Today we will dive into the fascinating world of moat investing, a strategy that separates the knowledge from the ordinary. I will guide you through the concept of economic moats, how to identify companies with strong defenses, and why incorporating moat stocks into your portfolio can be a game changer. If you see in the image, here I have placed a fortress, right? So you will get to know why I have placed a fortress here. And also, if you see the above screenshot, so one of the Indian stock, it has moved from 4 rupees to 3,770 rupees, right? So this is the power of finding more stocks. So let me do a simple calculation for this stock, right? So my invested amount is 1,000 rupees and the buy price is 4 rupees, right? So I would have received 250 shares, right? And what is the current value? The current value is 3,770. If you calculate the profit, it almost comes around 9.5 lakhs, right? You have invested 1,000 rupees in this stock and the current value is 9.5 lakhs. If you see the percentage, so this will be the percentage, right? It's almost a very huge percentage, right? So this is the power of mode stocks. In this video, I will be explaining how to find these kind of stocks for long-term investment, right? So without further delay, let's get into the video. In today's agenda, I will start explaining what is mode, then we will see what is economic mode, then we will see the difference between narrow and wide economic modes, and we'll see what are the different types of modes in business available, and also we'll tell you how to identify an economic mode in stocks. Then we'll see few examples of economic mode. Then we'll discuss about the risks and challenges, and we'll see how to build a mode portfolio. First things first, right? So every day in the stock market people can become very rich or lose a lot of money. As an investor, I look for ideas that are like old castles. Think about a castle with a big trench around it, keeping it safe from enemies during a war. In stock investing, there are something similar called an economic moat. It is like a protective barrier around a company, keeping it safe from competition. Moat is just a word we use to describe the protection a company build around its business to stay strong in the market, right? So if you see in this picture, here the castle is surrounded by the water body, right? So in financial world, in castle means like the company, right? The company is surrounded by the some water barrier, right? So here, if you see the attackers, right? So these attackers, so attackers means the competitor of the current business. So they cannot travel easily inside this castle, basically. So that is called the protection, right? So before moving further, let's see what is economic moat. An economic moat refers to the company with a long-term sustainable competitive advantage, which protects its profits from competitors and external threats. If a business is said to have an economic moat or moat for short, then it has a differentiating factor enabling the company to hold a competitive edge. In effect, the moat leads to sustainable profits over the long run and more defensible market share, as the advantage cannot be easily mimicked by others. In short, moats protect the market share and positioning of the companies and facilitate the long-term sustainability of their business model, including the continued generation of profitability. The successful investor Warren Buffett first introduced the concept of economic moat during an interview with Fortune magazine. An economic moat refers to the sustainable competitive advantages that a business possesses. Advantages that not only sets it apart from other competitors, right? So, but will sustain a long-term growth, continuously expand its market share, and bolster profitability. Therefore, the company's moat can determine how long it can maintain its competitive edge in the marketplace. The deeper moat, the better, right? So this is the quote of Warren Buffett. So what he's saying that the most important things to me is figuring out how big a moat there is around the business. What I love, of course, is a big castle and a big moat with pharaohs and crocodiles. So next we will see the difference between narrow and wide economic mode, right? So a narrow economic mode is when a firm commands only a slight competitive advantages over competing firms operating in the same or similar type of industry. While technically still representing an advantage, These sorts of modes tend to be short-lived, right? So, what is wide economic mode? So, however, a wide economic mode, on the other hand, it's a competitive advantage for more sustainable and difficult to compete within terms of market share, which means that narrow economic modes cannot be maintain the same sustainability for long term since they have only a slight competitive advantage. But if you see the wide economic mode, they have the most sustainable advantages who can live for long time. So next we will see what are the different types of modes in business. So these are all the five factors that builds mode around the companies, right? The first one is the brand strength. The next is cost advantage, network effect, regulatory control, switching costs. So first we will see the brand strength. A strong brand name is a formidable mode. Branding in business is akin to creating customer loyalty and trust. Companies with recognized and respected brands can often command premium prices for their products or services. This eventually uplifts their net margins. A few such brand names are Google, Coca-Cola, YouTube, etc. So I haven't taken any Indian company, right? Because if I take any Indian company here, people will think that that would be a mode company, right? So we will see how to identify the mode company in India. So the next one is the cost advantage, right? So companies that can produce goods and services at a lower cost than their competitors have a cost advantage. This might be due to economic of scale, superior technology, or efficient supply chain management. Such business has a high priority operating margins. Such few businesses are Amazon, Walmart, etc. Next, we will see the network effect, right? So the network effects occur when the value of a product or service increases as more people use it. The larger the user base, the more attractive the offering becomes. Such businesses demonstrate fast revenue growth. Good examples of such businesses are Facebook or Meta. Now Facebook we used to call as a Meta and Google, etc. So next we will see the regulatory control, right? So companies operating in industries with a significant regulatory barriers can enjoy a competitive edge. Strict regulations can limit the entry of new competitors. Pharmaceutical companies often face regulatory hurdles that protect them from new entrants and generic competition. The final one would be the switching cost, right? So the switching cost refer to the expenses or challenges customers face when switching from one product or service to another. High switching cost can create a barrier for customers to move to a competitor. Enterprise software provides like SAP have high switching cost as business rely heavily on their software. And transitioning to a new system is complex and costly. One example is Apple products. So next we will see a few examples of an economic mode, right? So economic modes can be viewed as a protective barrier against threats to the competitive positioning of companies. So stronger modes mean higher hurdles for the rest of the market. For instance, Apple is a clear example for a company with an economic mode from various sources. But the one we will focus on here is switching cost, right? The more difficult is to switch to rival offering either due to monetary reasons or the convenience. For Apple, not only it's expensive for customers to switch to a different product offering, but it is difficult to escape the so-called Apple ecosystem. If a consumer has MacBook, you can likely bet that the person also owns an iPhone and AirPods. The more Apple products that you own, the more benefits you can derive from each product due to how compatible and well integrated they are. That is, the whole is greater than the sum of the parts. Hence, the Apple product user tend to be some of the most loyal customers, which directly coincides with the more long-term returning revenue. Few Indian economic mode stocks are available right now. Based on the criteria discussed, we have few companies which is held in the economic modes. So if you see this screenshot, so there is a stock in India. The price has moved from the 4 rupees to 3,770 rupees, right? If you see the overall chart, it is continuously going up and going up, going up, right? So we have to identify these kind of stocks. Even right, we have these kind of stocks, right? So I will be sharing these kind of stocks. We have some risks and challenges, right? So no investment strategies without its challenges, right? So if you see this screenshot, right, the prices came from 1400 to 56 rupees. Okay, so this is the stock market. Okay, so if you're not finding the correct stock and the correct business, then definitely our portfolio will be in a red color, right? So you will be losing huge money. So basically, we have to identify the stocks very clearly and have to invest it, right? So if you choose the wrong stock, then definitely it will be a problem for us, right? Because it's our hard-earned money, and we are going to wait for a long term, right? Not 1 or 2 years. At least we will be waiting for 5 to 6 years, and maximum we can wait 10 to 15 years. So that is the case. We have to identify the correct mode stocks, and we have to identify the correct business which will be growing in future, and also the competitors cannot overtake their business, right? So those kind of things I will be discussing in further. So next we will see the very important part, how to identify an economic mode in stocks, right? So these are all the filter criteria we have to apply it, and we have to find out for the better result, right? So basically, we have to identify the gross margin percentage and operating margin percentage and EBITDA margin percentage and net profit margin percentage, and we have to identify the basic earnings per share and diluted earnings per share. So these are all the major criteria we have to apply to find out the mode stocks, right? So you can see the formulas also in the right hand side. Next, we will see building your mode portfolio. So it's time to put theory into the action. I will provide a practical tips on building a diversified mode focused portfolio. We will explore different sectors and industries to create a robust defenses against the market uncertainties. Remember that mode investing is about long term success. Take the knowledge gained today, conduct your research, and consider incorporating more stocks into your investment strategy. If you found this content valuable, don't forget to like, subscribe, and hit that notification bell for more insights into the world of finance. So I will be uploading a next video with the identified mode stocks in India, and I will be explaining why I have chosen this business and why I have chosen this stock for mode investing. Right? Because if I share the same content in this video, then this video length will be a big one. So instead of that, I will be uploading in the new videos. Right? So until next time, happy investing.